On behalf of the Brazilian American Chamber, I wanted to welcome you to this great event put on by Matos Filho and the Nasdaq and us, Brazil's dynamic capital markets, which is a subject very dear to me. Before I introduce Bob Mikui from the Nasdaq, I just want to tell you something very quickly about the Brazilian American Chamber. It's an independent, non-for-profit business membership organization dedicated to promoting better trade and investment flows between Brazil and the United States, and better understanding and better linkages, stronger linkages between the business communities. Our members range from small firms to Fortune 500 corporations and operate in a variety of sectors, including financial services, legal services, manufacturing, real estate, hospitality, trade, retail, technology, and many others. And many of those sectors are represented here. So without further ado, I would like to introduce Robert Mikui, Senior Vice President and Head of Global Markets at the Nasdaq. Robert?
I appreciate it. Bon dia to all of you. I want you to stop trying to figure out how old John is, since he worked with the current Fed's grandfather, and pay attention here to this panel. It's also great to see so many people here today, because we started this about 4 years ago, and to have not only you, John, but your predecessor here joining us again this morning. Nice to see you, Ted. It really speaks volumes to the fact that we've put together a great program to talk about what's happening in Brazil. Certainly we're ahead of it 4 years ago, as we began talking in the midst of zero IPOs in local IPOs in Brazil, and zero IPOs from Brazil in the U.S. at that time. And now we certainly are going through a period of a stronger, much stronger market. The IPO market in the U.S. has continued to be exceedingly strong, with 188 IPOs on Nasdaq just last year. It's one of our best years, certainly the best year that we've had since 2014, and we raised over $34 billion through those companies in the U.S. And it's really healthcare and financials and technology that have led the market, but we also see a number of consumer deals coming, and what I find very interesting is the fact that these same verticals are the verticals that we see in Brazil. We see a lot of technology, fintech, financials, technology, healthcare, and consumer deals that are not only considering local listings, but are considering listings here in the U.S. Again, I'd like to thank our partners this morning, the Chamber, Matos Filho, clearly Gottlieb, who have all helped to put this on this morning. We couldn't do this without their help. And like you, I look forward to today's discussion. So I'd like to bring the panel out and let them start what I know will be an interesting discussion that we're all excited to hear. Thanks.
Well, thanks to Nasdaq for having us here this morning, as well as the Chamber for helping to organize this panel. I'm Francesco Adel. I'm a partner at Cleary Gottlieb, and I've been working with Brazil and the rest of Latin America for the past 25 years, which seems like an amazingly long time. So have seen a few of these cycles, and so it's exciting to be here today to talk about the increased activity in Brazil, particularly in the capital markets.
In my world, which is more fintech, financial technology, and to a slightly lesser degree, broader technology, there's definitely a boom.
Yeah.
And I put it in sort of in a global context. I think you could make a pretty strong argument that Brazil is the hottest fintech market in the world right now. And I'm not even sure who number 2 would be. So are we in a boom? Absolutely. Yeah. Is it going to continue, at least for the foreseeable future? And there's a lot more deals coming. At least in fintech and tech related.
You know, the first couple deals are always tough after there's been a dry spell. And so I think that the ability of fintech to jump in there and have some strong growth stories and exciting companies going public, I think helps to kind of drive that a little.
It's not just growth, but it's also profitability. Mm-hmm. You know, when I took Stone public, you got to keep in mind the company was still growing 75% year over year, and hugely profitable. That was in 18. I took XP public in 19, and XP was growing 100% plus year over year and hugely profitable. So particularly when you juxtapose it to some of the high growth IPOs and companies in the US that don't make any money and are having to subsidize their customer acquisition, the Brazilians have really good businesses.
Said, I think what's very interesting is seeing the small caps and the mid caps in different sectors going public in a way that they couldn't do before. So last week, for instance, there was an oil and gas company that nobody had ever heard of, except for maybe the banks that were looking for clients, that went public, and the retail part was something like 18 times oversubscribed. This is something that's very different from what we had in the past, which were large companies with well-known brands going public. So it's really opening a window to a part of the market that didn't have access to this type of capital before. So it's and I think on top of that, you have and interest rates and things like that changing. You have the whole transformation in financial markets brought by XP especially, and money flowing down from the main banks to the independent platforms and asset managers, and really a strong movement from retail wanting access to different things and different products. That's sort of driving this. It's not only institutional, so that's pretty interesting.
I always advise people, to not to go public unless they have to, from a structural perspective, either capital structure, capital markets. It should be a corporate finance solution versus an ego solution. Liquidity. I think everyone wants a little bit of liquidity. We have seen a lot of these companies that have started from nothing and created billions in value. Stone went from a value of 0 to $9 billion in 4.5 years. XP took 18 years, but these companies do start from nowhere, right? They are startups and create amazing amounts of value. So liquidity seems to be pretty important. I think that was a little bit more. There were more issues, for XP, for example, because they had other shareholders in there, private equity, a bank. There were some political considerations. With Stone, some of it was timing. It was, do we go now? And with Stone, we did it was a very delicate process where we literally did the IPO between the 2 presidential elections, right? Between 1 and 2, which was I'd never done anything like that before. And we weren't certain whether we were going to be able to go public, if the election went the wrong way. M&A tends to be less of a focus, I think, for companies. A public currency is always valuable, but I haven't seen anybody say, I have to go public because I want to do M&A.
Yeah.
I've seen that here in the U.S., but I haven't seen it yet with Brazilian firms. So it's really, I think, driven a lot by liquidity for existing shareholders and investors.
Yeah. How do you advise them about the risk calculation, right? About the difference between the possible risks of going public too soon in that life cycle, or before the company has the different systems in place, whether it's internal controls and the ability to produce reliable financial statements, or whether it's kind of, sophistication of senior management, those types of issues.
We have early discussions with companies that look to go public, not necessarily in the next 3 to 6 months, but a little bit 1 or 2 years down the road, is starting those early discussions and seeing what they need to prepare, and in terms of controls, corporate governance, and use of proceeds, etc. And what we're seeing is also companies working with their advisors, working often with accountants in doing pre-IPO assessments, and really understand, are their controls up to spec? What do they need to do? Whether it's for a listing in Brazil, Novo Mercado, etc., or listing in the US, and see how far they are from these benchmarks, if you want. And that helps them a lot because it establishes a path as they progress. And I think very important to Vanessa's point is, yes, after the IPO, that they are a little bit on their own. Hopefully not totally on their own, but a little bit on their own. And the preparation and getting them ready to that point is very, very important, because the first quarter results are incredibly important. We see it, and we see this in every market, in the US and in emerging markets. The first quarter, if is not up to expectations, the impact from investors in the market is massive. So preparing the company in order to be ready to do that, to understand what expectations are, to be ready to deliver and hopefully surpass expectations is something very critical, something that companies don't necessarily know before they embark on the IPO process, and I think it's up to the advisors in order to help the companies understand that. And I think that it becomes even more important, if you want, in a market such as now, which is incredibly active, and everybody's kind of rushing to tap the window and finding the financing that they're looking for in order to take advantage of the growth opportunities they see ahead.
Vanessa, what kinds of companies are you seeing that are exploring listings only on the B3, and why do you think that's happening?
I believe that most of Brazilian companies are not totally ready to like list in the US, for example. So when we talk about Sarbanes-Oxley, for example, for most of them it's like a huge thing, and you need a lot of internal controls and a lot of training. We don't have a lot of people training Brazil to do that kind of work. There is also the liability, a lot of things here. So if the company is not, there is I think a right time and a right size to come to the US or other more developed capital markets environment. So what I see is that Brazilian companies that goes and do the listing only in Brazil are small, medium companies that need to get ready to this process and are more comfortable in our environment as a whole. I think that's
back in the day, 15, 20 years ago, when Brazil went through the prior IPO boom, pretty much what you saw were a bunch of Brazilian-only IPOs, and then a good handful of dual-listed, right? Both in Brazil and in the U.S. Now what we're seeing is that I don't want to say detachment, but a lot of strong IPOs that are only listed in the U.S. and are not listed in Brazil. And there are even some that, and maybe it's the nuances of those transactions, where they're not even in tech or education, but they'll list in the U.S. and then, I don't know if it's a mining company, they'll list in Canada too as, kind of an add-on. Do you think that that's in part in order to separate the valuation discussion from kind of Brazil risk to more of a sort of broader investment? And are there other reasons too, do you think?
I think there used to be.
Yeah.
Right? So we used to talk about a Brazil discount. People don't really talk about a Brazil discount anymore. I mean, some people might even say there's a Brazil premium for the privilege of investing in Brazil. This is a common debate that I hear a lot, and there's a lot of conversations about dual listings. My personal belief, I'm not a capital markets expert, is that the need for a dual listing is increasingly diminishing, and that a single listing is fine. Are there situations still where a dual listing is helpful? Sure, but I don't think it's the same as it was 10 years ago. And I think particularly with the expansion of the asset managers and the fund managers, you don't see as much. There's no really any valuation arbitrage that you'll find from one market to another. So I'm of the personal belief that a dual listing just doesn't have the same benefits that it used to have.
I think there's also a factor that sometimes you're considering listing here, and we're talking about the benefits, and but there are also some particularities you have to consider. First, you might get a better understanding of your market because you have different peers. At the same time, maybe the U.S. market doesn't really understand details of the company that a Brazilian investor could understand better and could react better to changes in management decisions and things like that. And we've seen that happen here, with price getting, the stock getting kicked because of a management decision that maybe in Brazil wouldn't cause such a stir. The other thing is, if you're looking at the exchange rate in Brazil now and the way it's going, and possibly the real going up to 5 or things like that. One thing is you're going public in the U.S. and you have a certain level of revenues and things like that. With the dollar at 350, a completely different thing. It's $1.05, 550.
Yeah.
So you might have a market expecting something that you won't be able to deliver. And if you're in Brazil, it's different because you're there and people are looking at things in reais. Sometimes, having a piece of the equity there and a piece here can sort of minimize or dilute a little bit of that risk. But I agree that it's, it's not, from the company perspective and from a controls perspective and just the work that you have to put for the offer and then ongoing, it's a tough proposition to hold itself.
And I want to comment from a legal perspective. We have been discussing this a lot in Brazil with B3 and CVM since we had these very successful stories of companies listing here for these very good reasons, liquidity and peers and things and valuation. We cannot fight better valuation, of course. That's nothing we can do about it. There's a lot we can do about our legislation. The framework in Brazil have been, it's everybody's discussing that in Brazil. It's a huge point. There is a few points that are important in this discussion. The first one is Brazilian companies are not allowed to list their shares directly here. So Brazilian companies that are listed here had to move their headquarters to another jurisdiction and then list here at Nasdaq. And that means they are not allowed to do an IPO in Brazil because most of their assets, more than 50% of their assets are in Brazil. So the legislation today in Brazil says that if more than 50% of your assets are in Brazil, you're not a foreign company. So you're not allowed to have your BDRs listed in Brazil. That's one thing that's really important. You also have a lot of tax impacts when you have to, your money has to flow from Brazil to your other jurisdiction and come back. So now there is, after this very successful IPO that we had here, everything had, went fast, and now we have a public hearing in Brazil about BDRs. So CVM wants to hear the market about our rule. We believe that's not the best rule. We have to be more flexible about this. And if you have a company that has the size and the offering that's big enough to have liquidity on both markets, it may be a good case, but we have to change the rules. So now what's being proposed is that the foreign company, it's going to be any company that has its headquarters outside Brazil, and we're not going to talk about assets anymore, and has to be traded in Nasdaq, for example, not in another stock exchange. Yeah.
We talked about the Brazilian asset-based companies, if you want, listing in the U.S., potentially BDRs, but definitely I've been having a lot more discussions in the U.S. with potential U.S. issuers, but I would say even more so with Latin American issuers outside of Brazil who see the amount of liquidity that there is currently in Brazil, not necessarily in their home market, and want to see how do I explore that by listing, either directly in Brazil, either through a BDR, either a local listing and a BDR or a US listing and a BDR. And I would say we have a lot of discussions of that because it is a very big asset management base, and it's incrementally, it's getting bigger basically, as we go through, both on the retail side, but I think particularly institutional side for these non-Brazilian corporates, they're really exploring right now, and I wouldn't be surprised I'd give you a call again on that.
From my perspective, I don't see the type of volume that these firms do. And since I choose my deals, right, so I invest first before I agree to advise them. But that having been said, there's a wave coming. I can't from what I can see, it's going to be pretty big. Yeah, I totally agree. I suspect it's bigger than anybody expects, so it could be a great year. I am seeing, besides the IPOs, at least in my world, the banks are scared. You can see, and again, I've known, some of the senior executives from the biggest banks in Brazil for years. You can see the fear. And as the emerging Brazilian tech and fintech companies get stronger, more confident, I think you're going to see more M&A.
Yeah.
Maybe more than was suggested, because I think the market is ready.
And there's, adding to that, there's a VC ecosystem that didn't exist in the past. And it's really, becoming something closer to what we have here.
Right.
And, large firms from here that maybe got burned in the past going back, and some local players doing pretty well. So that's great for the new companies. And then, then you have M&As, and you have, so it's another source of funding, and just creating the whole big picture.